following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman here, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. And I have to remember, 12:05, it's so unusual that I have to make a note. I've got notes everywhere. I've got to do an update for my subscribers, 12:15 to 12:30. It's unusual. Usually I don't do very much because I find that the next day you can do an even better update. But we'll see. It's just merely for us to hold hands and say, yep, pretty much what we thought would happen. Dow's up 78 at 18,527. S&P's up 10 at 2182. The comp index is up 28 at 5240. You've got gold that was up sharply, then it pulled back. Now it's up again. It's up 12 at 1337. Fascinating, complex situation we've got here. We've got the Rubik's Cube twisting all those little squares. And now we've got silver up a little bit, it's 1887. Platinum's up 7 at 1081. High-grade copper is at 208.40. It's just stuck in those low twos. And we've got crude oil, which is at 47.79, up 46. Bonds are up 100 at 172 and 29 seconds, up over a dollar, up 1.06. And the dollar is down 0.053 at 95.69. All right, got that out of the way. A bunch of things I want to talk about. Within the context of the Chapman wave methodology, and I'm going to go through that. Today's going to be Technical Friday, and I want to really get you to the technicals. What I've been discussing is that if you're looking at the E-mini here, this is the continuous contract, but it's called the September contract, trades at exactly the same price. The only difference is it gets smoothed out, and then what we get is we get I'm able to give the monthly chart, and that's really important. Otherwise, the other one's just too short. Most importantly, you know that in weekly inside track, the Chapman wave methodology that I talk about, the inside track, a little up channel that you draw, it's not the proper channel that it trades between. It is the upper range of either a triangle or a channel, but in that range, the price gets repelled every time it gets there. It just cannot break out. It has a terrible time. Well, for weeks, since the week of the 15th of July, we're looking at the resistance in that green line and that pink line, dashed line, in the E-mini that says, we're right there. This is, in fact, the area where you've got to start breaking out or else you're going to start pulling back. Now, I have a couple of little technical indicators that are suggesting the upside is kind of limited right now. And the downside, I would call it limited in perspective of where we come from, 17,084 in the S&P mini to the most recent now of 2191.50. I think that you could pull back, and over the coming weeks, there's a possibility we can test the 2154 level. 300 points down in the Dow, about 30 points down in the S&P. However, I don't want to do anything drastic right now because the price is held so beautifully in the MACD, the moving average convergence divergence, still strong. The stochastic weekly chart is only just dipping down now, and it's still at 97. I mean, you don't get much higher than 100, right? And we've already been just above 97. This is fantastic action. The flatter that the stochastic can be without breaking down in the mid-90s, the stronger the chances are that you will not have a major pullback. That's number one. Number two is the pattern that we're looking at here in the E-mini, the rectangle formation. What's my expression? Rectangle formations can last a lot longer than your patience and possibly sometimes your money, because you think it's going to break out and you try to buy it and then it pulls back. You think it's going to break down and it pops up. Number one. Number two is these rectangle formations tend to wiggle around and it limits the upside, and this is a catalyst. And the catalyst will have to come from the MACD and the stochastic and the daily chart, and they're very poor. The 120-minute chart achieved exactly what it was supposed to go to D. Did it go to D just above 2176.25? Oh, I would say that it went there because it went to 21. 86.75, a huge move up when it seemed that the Fed will do nothing. This is going to be, I think the market's getting tired of this, and now the market's just back to being a market, and this is what I'm looking at. Now, let me just run this down here on a purely technical basis. For my subscribers to my opening call, I have this chart, and it is the 120-minute chart. I added it recently. I used to just put it in when I thought it was important, but it has been so important because it has a combination of a technique. I've adapted from Elliott Wave. I now don't think I'm able to call it Elliott Wave anymore because it is so much part of my vernacular, and it breaks some of the rules that are very key to the Elliott Wave. So I really have to call it, I'm going to call it Chapman Wave 5. And finally, after 30 years or whatever it is, I'm able to use numbers instead of just the letters. And the numbers now reflect something very different, decision I made over the past couple of weeks. And that says that we've gone to a trough E in the 120-minute chart. We made the same arch formation after the Chapman Wave 5 at 18,622 on the 20th of July. The Chapman Wave 5 on the downside back on the 2nd of August at 18,247. The Chapman Wave 5 at 18,668 on the 15th of August. And now we've just had a Chapman Wave 5, but I don't think it's actually complete because some of the specs that I would like to see, I just don't know. They're not there yet. So it's achieved exactly what we wanted. It's gone to a lower low, but going from 6,468 to 18,466, and then 18,448, and yesterday's was yesterday's low. Yeah, the low of the 25th. That is 26 today. Yeah, of yesterday, 18,431. Those are just nominal new lows. So it's achieved everything I wanted. I'm going to have to make some decisions here. Do we cover our short position, the only real index short that we've got, which is at this point, we're still a little bit ahead in that short position. Do I do that, and do I switch to the long side? There are some decisions that I'll have to make in the 15 minutes after my show, but today's show will help me. I hope it helps you in that we've got another single leg A up. Is this leg going to fail in this arch formation? That's 120. I've got a signal that's saying that on Monday, early Monday, there should be a Dow Jones slip to the negative side. So that's helping me now in my assessment. And the other thing is that the daily chart has only gone 220 points down from the 18,668 peak E top in the daily chart on the 15th of August, whereas before you went 9 sessions and you went 400 points down that July 20th. I like what I'm seeing. You've held the trend line. There's a lot going on here. The XLF, remember we spoke about it yesterday. We're along the XLF. It's looking good. I'm going to have to make some decisions. Something tells me we're not quite done with the sideways to down movement. And something else tells me don't get too carried away with all the bearishness that so many people are talking about here, because the charts themselves are suggesting something else, that there's still some weakness, but it's rotational. Now let me do something else. I want to do, we've got a few seconds left. I just want to quickly look at the VIX index, and then I want to discuss something in the Chapman wave called the peak F. And we have gone to a peak C in the VIX index. It hit just over 14. Right now it's at 1265. It's already been down to, hit 1390 today. It's already been down to 1213. Oh, I tell you, this is a fascinating market. You have to, don't listen to the news. You have to look at your charts and do your homework. I'll be back. Basil Chapman, Target Technicians Hour. Dow's up 86, S&P's up 11.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, I'm back. I forgot to show this is the 2-minute Dow chart, the E-mini chart. You remember, you've got this is an aberrational. Yes, it did go to a peak deep, very nice. It pulled back from the 2179-ish level down to the 2170s. And and then it screamed to the upside because it hadn't completed the move. I love these long down channels that remain in a very narrow trading band. And then what happens is it breaks out. However, the breakout cannot go back into it. In other words, 2182.25 right now can't go back into the 2180, 2179 area. It has to use this as a liftoff period. This should be A, and that should be brand new B. Underneath that, so gray A, gray B, and you want to see 2184.75 in the E-mini, and you want to see it no later than 11 by 11:30, okay? And you want to see it without breaking that low. So that's that. The next one is just quickly the 10-minute chart. Then I want to do something that I promised I would get to. I was asked, look, this is a single leg A to the upside. This is the one that you got to be really careful about. It can fail and it will fail. It's the same story. The 10 minutes is the same. Break under 2178, it's done for. It's going to struggle. And a scream to the upside between now and 11:30 is a little too soon. I have to say 11:45 to the 2185.75 area. That's a really good sign. Let's just go one step at a time. You've got the peak D in the 120-minute chart. I don't want to mess with that. So I had a question, and this is a really good question. I'll do the dollar in a moment, and I'll do IWM, and I'll do the missing links here, MDY. But let me just answer this question. I'm going to do a lot more over the weekend if I have a chance, and I think I will, to talk about portfolio and what we're looking at and why we're looking at it for the next few months. Now, that will take into account that first week of October when we get the election. I had a ton to talk about. I'm just not going to waste time on that right now. Maybe Monday or Tuesday I'll get into it. I'll talk about the politics of politics, not who you should vote for, just the politics of politics. But what I do want to do now is someone has to do this before noon. And the question is my 401k. I'm about to readjust it. My feeling is this. The work that we've done so far has been kind of correct in what we're looking at sector-wise. That's from our opening call subscribers. I'm going to make the suggestion that you focus a little bit more on this. Is going to also answer Bob's question on the financials if you're able to, like the XLF. as long as you're able to put some kind of a stop in place, give it a chance. The XLF is just, there's nothing said, nothing done, but it's now 24.21. And I think that that's important, XLF. So I'm gonna say within the category of whatever you're doing, and we've got a peak E now. It could have recycled, but I'm going to call it an E. So there certainly could be a pullback next week. But I'm thinking that the financial sector, you might want to take a little bit of your money and put some of it in the XLF. Number one. Number two, I did a lot of work on the gold and the dollar. I think it's the gold stocks that are telling me that gold will probably be pulling back more. As you know, I've been kind of negative on gold in terms of the, let me just go to the GC, just in terms of from the way the daily acted, but I've been saying the weekly is holding very well. So if you're able to, I wouldn't do anything with gold right now. I try to wait, have patience to wait for 1336 right now. If you can see the 1283 200 period moving average, that's where I try to do something. So I'm going to be talking about this in my newsletter over the weekend. Well, I'm going to try to plan something that's more cogent. I'd avoid the auto retailers, GDX. I'd look at GDX before I looked at the GLD, and I'd like to see GDX at 2806. I'd like to see it test 26 to 2530 area. That's where I'd probably want to do some nibbling. So I don't know what you can do now, but I'd say stick to the kind of things we're looking at now. I'm getting ready to switch from the short side to the long side. I just have to wait for certain parameters to be hit. That's in the Dow. And all I can say is be a little bit flexible and don't overdo it. I would not get, this is right now. I would love you to wait a few weeks, but you can't. So I try to be as neutral as I can. I wouldn't be overly aggressive. I don't think this is a time to be overly aggressive. At the same time, sector-wise, I'd be very cautious. I'd be a little cautious. I'd be cautious on the XLF, anything to do with the biotechs, etc. Biotechs having a nice bounce today. I'd avoid it for now. Don't go to biotechs. And I'd also say maybe avoid the pharmaceuticals. So that's the answer to that. I hope that helps you some. I'll try to deal with it more over the weekend, but I know you need to do it by noon. Well, good luck. And so, and you know the one that I'm looking at for the commodities, you just have to wait. I want to pull back in the commodities before I get into that. So I hope that helps you to a certain extent. Now, let's get to the next nitty-gritty was the VIX index. Had a lovely email from someone who listens to us. I believe it's from Denmark, who said that, who was asking about the VIX. And I said that you've got to treat the VIX. First of all, it's a timing mechanism. If you're able to get that little trough at the bottom or to get out on a peak D, that's really the best way to play it on the shorter term. Do not buy, say, the VXX and expect to hold it for a few months or a year. And even though the markets, let's just say the market goes from 18,532 today, and in 6 months' time it's at 16,500, and your VIX index has shrunk and been split yet again. No, it's not made for that. Get used to it. It's a trading vehicle only. So I'm not sure. Now, if you want to play the VIX in terms of the longer term, you do have to do, and that was the question. Yes, I would agree. Do it with options. That is the safest way to do it. But even then, you're playing, it's a dangerous game because what if it splits? Your option's going to split. It's going to be worth, it's a tough way to do it. So I would say if you can, rather go for an index and short it via a put than to use the volatility index. Try to time the VIX because you want to be in, you want to be out. The VIX is extraordinary to hold. If it, say, goes into the 19s and then the 21s, you want to hold it because you're expecting 23, 28. Maybe even that gives you that big reversal day where it spikes into the, who knows, 40s or 50s. But that's the only time you can hold it, and then it's probably only 3 days to a week. So I hope that cleared that up. So we've got that out the way. We've got Frank in Gloucester. Frank, how are you? Frank, you there?
Yes, I am. Sorry, you got me?
Yes. Okay. Yep, I'm right with you. You'd like to look at?
I would like to look at MWA. And my question is this. I'm trying to apply the Chapman wave to this thing, both on a daily and a weekly basis.
Yes.
Boy, I need a little help. I see all kinds of peaks here.
Okay, so let me do this because I've got it all notated because we happen to own it from $10.69 and it's trading at $12.41, making a U-shaped pattern. So we're about to take a break. And what I will do, will you be able to see my charts as I'm talking, or you want to archive? Okay.
Yes.
Then I'm going to have it all prepared for you with the notations, and we'll go through it. This is Mueller Water Products, trading at $12.41, up 14 cents. And Frank and I will be back in a moment. We've got a break coming up. Frank is from Gloucester, Mass. Gloucester, a lovely fishing town. And I'll be back with Frank in a moment.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. And we're back with Frank from Gloucester, and we're looking at Mueller Water Products. It's trading at $12.40, up 13 cents. As I said, we do have a position in it. Now, one of the things that I'm looking at is you always have to go back to the most obvious low bar. So I'm just going to say to you, if you go back to the low of the 20th of January, that was that major turnaround day, where it was at 752, I get a peak A, B, C, and my D is right there at $9.15 on the 7th of March. Then it pulls back and it does another A, B, C, D, and it goes to an E on the 4th of April. I believe it's 4th.
How did you determine it was another A up leg there in the middle of March?
Oh, because it went to a D, it pulled back, it hit the 200-period moving average. The MACD flattened out, but the stochastic dropped very sharply from the 90s to under 80%, and it looks as if that there was a brand new buy signal that was triggered as soon as the stochastic went above 80%.
Okay.
And that bar, I'll tell you why, the bar of the 17th of March that spiked to 941, that bar just so clearly took out that peak D high that I could have put an alternate count, but the way it held the 9-period moving average, everything about it looked like it was a new buy mode. And then what it did is it went perfectly to peak E. Now I'm going to do something real quickly here, if I can just do it, because some people are listening and they might not know quite what we're talking about. This is the pattern we always look for, folks. I'm just showing it right here. You look for the most identifiable low bar. That's the one that we saw on the 20th. And from there on, each successively higher peak is labeled uppercase A, then B, then C, then D. And then there can be anything can happen after D. The objective is to get you to D, and then there are other techniques in the Chapman wave that could keep you going, and that's exactly what we're talking about now with Frank. So another technique said that we could be on a new buy signal to buy mode. The stochastic was holding beautifully over 80%. The MACD was climbing. It showed no sign of turning down, and then it suddenly turned down April the 16th at 10:26. Pulls back for 4 bars and starts another move. Now, this one I wasn't so sure of because there could have been an alternate count until it got to that B, because that B could not have been, once you get to G, you cannot get an H. There's no H. So that had to be a C, and we waited around. That's where I believe we took we saw another small position. We got stopped out. One, we got a nice profit. And then we started a brand new move from the low of the 10.28 on the 19th of May. That went to D and it went to E. But if you look at the MACD and stochastic, they were very weak when it went to that high on the 9th, I think, of June at 1175. And that was a peak E. So although I wasn't sure, the moment it broke the 9-period moving average, everything about it said, okay, that is a peak of consequence. Look at the way the MACD and stochastic are pulling back. And then it started a new move up. We went to A. That was on the 27th of June. It goes to A, B. I had an alternate count. And that alternate count went for a little while. Then it broke out. Went to a C and a D. And that's where we are, $12.54 from the 11th of August.
Okay.
Now, one could say, oh, wait a minute, isn't this like a brand new A and a B? So I have to say, if you want, I don't know, what letter would you have there on the 11th?
Well, that's a good question. I'm not sure. I guess I'm still learning this process.
Okay, well, this is one of those times where if I stick with my technicals are saying just like on every other pullback, you got to be a bit careful here. What I tend to do is I go for the most conservative count, and I've got it as a D. I'd also said that now if we can just jump, we're going to go to the 120-minute chart, and I also look for confirmation with the 120-minute chart. And that confirmed that it was a peak E at $12.54 at 1:30 in the afternoon on the 11th of August. It pulls back to a trough D. It's got a gray A, a gray B, and a gray C. And I'm suspecting there's a real good chance it's going to have one little pop. It's going to try to test the 1254 area. The reason why I say that is if it does that between now and, say, Tuesday or Wednesday of next week, that'll get me in the weekly chart to a D. And that's really important.
Okay. I have a G in the weekly. I counted to a G.
Yes, I've got a G/C on the weekly chart. So you're absolutely correct. And that's the reason why I have to take into consideration that the 1254 level that was hit on the 11th in the daily could in fact now this is where we've gone through the easy step of that first peak D. Now comes the thing where you have to do some thinking, you have to do some other technical work. And my thinking right now is that MWA is close to some kind of a top. It can go a little higher to the 1255 or higher area, but then I think it's going to pull back and it's going to digest the gains. So I'm looking for my subscribers to add to this position. And one of the reasons is in the monthly chart, I've got this only as a leg B, and it's B in the Chapman wave stalk leg formation.
Wow, okay.
So a lot happens here, because any pullback, if it takes out 1054, I've got to be real careful. But if it holds steady and we have a pullback of a sideways consolidation, that's really important. And that says to me, I'm correct in considering that this is a stock that in the year 2016 is going to go to even higher highs. And in fact, if you look at the left side, there was a high back in 2007 in June of $18. And I think that the all-time high was just a little higher at 1845. I'm thinking that it's in an area that is in demand. This is water, diagnostics, monitors, controls, etc., etc. That's on the fundamental side. And my analysis says there's a real good chance that this is going to be one of those stocks that holds very nicely on any pullback. This is my thinking, we don't know. But if it closes under 1160, I have to watch the weekly chart closely. So I think it's going to go a little higher to D, then I think it's going to pull back. And when it pulls back, where I want to enter for another position is going to be very, very important. Now, what's really important about, if you look at the weekly chart, the technicals, the MACD is still very good, and the stochastics at 90%. So I'm saying that's, to me, the most important thing. And the weekly chart leads to the monthly, and the monthly is at 94% in the stochastic. So far, everything about this Mueller water products, I do like. I'd like to add to it on a dip.
Bravo.
So you know what I'm going to do? Send me an email and say, this is Frank, and we just spoke about it. Could you send me a chart, and I will send you the chart so you can have a look at what I did. I'll send you a longer-term chart. I'll open it up, send it off the daily, and you'll see where I've made my changes. You'll see the trades we put on, and then I'll do it on the weekly and the monthly, and you'll be able to digest that and maybe apply it. Now, as I say, D is what you want to get to, because it's still, I'm waiting for a D in the weekly, because I think it's more a C than a D. I'm anticipating that this is going to go higher, then we've got to be a bit careful.
Okay, a great study. Thank you.
Thank you very much, Frank, and thank you for giving me an opportunity to explain it. I'll be right back. Folks, the Dow is now up 65, S&P's up 9, a little bit of a dip there. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. Actually, I wanted to do a little bit more on the technical side. I'll have to do some of those questions I've dealt with a little bit, but I'll deal with them again in a moment. But let me first do this. This is I have no idea why this works and how it works, but I found it to be absolutely an amazing tool. This is the S&P Cash. This is a 5-minute chart. And you can see it closed yesterday and it opened today. I don't know why it should even work, because it's skipping the whole night. It seems to work even better than the futures themselves. But look at the low that was made yesterday, just after 3 o'clock, at 2169. And look at the way the 5-minute chart went to peak A, peak B, peak C, and a peak D this morning at 1026 at 2187. Let me just have something to drink here. There you are. And then it goes peak D, and it pulls back sharply. And there, look at that trend line, Chapman Wave inside wedge trend line, a resistance. Pulls back, and what does it do? It comes back to a trough A, trough B, and look great right there, right? And at 11:30, except look for the lowercase h pattern, that dreaded h pattern, fails on the left side, breaks down, makes a 1-2-1 to the downside, and I mean, I don't even know how to explain it. This is the cash. In other words, it's missing a whole bunch of data, but it works. Look at this. Yeah, look how it worked right there to the peak E. Look how you got the left side, right side price time match there to the doji candle. I love this. Okay, now I needed to show something. I was asked about the PDF that I talked about yesterday. We were talking about the stock Alta. Oh, let me just do this if you don't mind. SPX.X. Got it. Now I can click on this and Alta. So what I said was, in the Chapman Wave methodology, there's something that I consider to be, I've always considered to be important, and it's when you make a peak, not you, when a chart pattern makes a peak F top, and that peak F top coincides with weak technicals. My analysis, and I gave this to my subscribers for a few days now, was within the context, now let me just find this if I can. Okay, there it is. That within the context of, I must find it. Is that it? No. There it is. So if you're looking at chart formations, and those chart formations have a wave count that at some point is actually quite clear. In other words, you know, Tom says it, Larry says it, it's very important that if you see a pattern that you use a lot, you don't want to talk yourself into the pattern. You want to say, hey, that is something that fits all the criteria that I usually look for. And because it fits all the criteria, we want to look at it in a certain way. And this was the leg F going to the upside in Ultra Salon Cosmetic and Fragrances. So what I'd said is that if I didn't know that earnings were coming out, I would be prepared to short the stock because everything about it, leg F in the daily, leg F in the weekly, leg E in the monthly says there's a good chance we're looking at a hat trick top. What is a hat trick top? And a peak D in the 120-minute chart. That peak D top, peak F top essentially says a couple of things. It says right here, my Chapman Wave CD called Introducing the Chapman Wave Methodology in Chapter 7, a whole big thing on the sell signal. And the sell signal, I'll talk about peak F and the rare peak G are great possible shorts. I talk about it in such a way. Oops, that's a nice. We'll talk about that. This in a moment. This is a cartoon that I used to draw years ago. I put it here. There's a leaf coming off the tree, and this woman's looking, and the leaf comes down, and she says, "I hope that wasn't a market omen." That was the fall, obviously. So let me just look for this again. Peak F. There it is. So peak F, Chapter 7, I usually called a serious peak F top. Remember, I spent a little time on it 3 days ago, 2 days ago, and I'm going to do that again today. What we're looking at is, what did I just do? Hey. Okay, what we're looking at is, in the Chapman Wave, the 6 highest peak F is where you've got to be really careful, especially if the technicals are failing. And I give this explanation, I give an example, I talk about it in great detail, and I talk about the rare peak G. So I spoke about this and said everything about it says to me that the earnings coming out this afternoon are going to be not as good as everybody thought. And a lot of people have disagreed, but it doesn't matter because I just did my homework and I said, okay, we tried for a short on Wednesday at 274.61 and on Wednesday. We got taken out on Thursday. Was that yesterday? Or whatever it is. Yeah, we got on the 23rd. Right, 24th, 25th. That was on Tuesday. Wednesday we got taken out. Thursday I said if it pops to 277.01, we want to buy, we want to short it right there. It didn't. Well, today it gave us an opportunity to short it again. We made a minus 2.40 loss, a 0.87% loss because it was an experiment. Today we got the short at 270.11. It opened, it gapped down last night in 9 points and then came back to only -3. Then it went down to -6. I said, let's try to get it at 270, over 270. And we got it at 270.11. It traded down to 250 this morning. Was that a round number? 250.24. It's traded, that's 29 points from the top and 20-something points from yesterday's close. Now what we're looking at is down 14 at 256. So we have a bit of a comfort factor. I forgot to say that if we were right, I didn't even anticipate that we'd get it because it was down still quite sharply. So it was amazing. However, I forgot to say that if it goes to a certain level, lower the stop at least to the break-even point. I never did that. We're vulnerable because it could suddenly, who knows, these things. But everything about it says next week we should open lower than 278.63, the all-time high. And if that's the case, we've made a peak F. If this trades under the 9-period moving average in the weekly chart, that'll be the first time it's traded under it since way back in March, the week of the 4th of this year. So that's saying to me, good, you've got a good entry point. The case is not closed, but it sets you up, and that's using the Chapman Wave methodology. So on one of this technical Friday, I just wanted to explain why I discussed it yesterday. I even discussed it with Tom, and there's that peak D top in the 120-minute chart. I could not have wished for anything more perfect as an example of the technique than to get a D in the 120-minute chart, a potential F in the, it is a peak F now in the daily, a leg F that could tumble next week, and a leg, and this is the most important thing. Remember, we did this with Apple. I've spoken about it many times in different stocks, and I said Apple's probably making a more intermediate term or longer term peak because of the peak that it hit, and this is leg E. So we'll see. It's a fantastic stock, fantastic company, and we'll just have to see what happens. Remember Apple way back peak F at 134.54. I'll be back. Basil Chapman, Tiger Technicians Hour. The buzz is going off. I know I've got a break coming up. The Dow's only up 11.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, I can't remember now, but in the last break, when we came at the end of the break, exactly when I was talking about the S&P, and you saw me drawing in this left side, right side price time match, and that said that the gap up, the low of 2175.05, that's on the S&P cash, should be hit by 1205. Well, we just did that. We went right through it. We went down to 2171.77. So these are techniques that live. You saw them as I was doing them. Do I trade them perfect like this? No, I don't. In fact, I had some perfect trades all set up all day, and I've just been so busy. I actually haven't even clicked on one because I was just busy getting all other stuff ready. I mean, everything was there. I just had to go click, and I couldn't. And then I didn't want to do this over here, over on that bounce, because I was in the middle of the show. And I just didn't want to be distracted. So, yeah, but that's the technique. The technique is there. Now, there are a couple of things that I want to do. We've got a few moments. So Apple did the same thing at that peak F, and I said, this is good. Really be careful, because it could be an intermediate term type decline. And I think Apple's matured, and that's the whole thing about it. Now, and I think also, in a sense, might be maturing. We won't know yet. So, all right, I just wanted to do that. Just a real couple of quick questions. The other thing. So, Al's just sent me a thing saying, what? I'm not sure. Are you short or you long? We're short the Dow. We're still short the Dow. And we had one other index that I was short, a sector that is, and we got stopped out. We were short at 66.01, I think 66.44.45 or something. So just a tiny little loss. I want to reassess that one. I'm not even sure that I just don't know yet. I need to take that break when I finish the show for about 15 minutes, and then I'll send out a missive to my subscribers. Very unusual. So now let's do a couple of things here. Within the context of who was it earlier on that I was looking at, and the question was, Sean, I think it was, what I know about is, I'm going to emphasize, if you can, be a little light, be flexible. If you aren't able to change the portfolio at all for 3 months, wow, this is a time, I see a 1,500 point decline in the Dow at some point, but I also see new all-time highs. And when the new all-time highs come, I hope it's after the decline, not before. And if it's after the decline, I think that that'll be that next step in the coda phase, and that's what I'm looking at. So please be aware of all these things. So be a little light, don't overdo it. The shorts could work for a little while, but then how do you change it? I just don't know how you can make up the portfolio. So stick with kind of what you have, but I am going to say that maybe you can lean a little bit to the XLF, just a little bit, don't get carried away. Okay, now let's do this real quickly. Crude oil, I was asked about that. Yeah, crude oil, this is in the range. Remember I said we've pulled back. That 200-period moving average of 48.70 is going to be like a magnet both ways. It's going to attract and then repel. This is the move that should not have stopped. It should have gone higher. The dollar, I was asked that. I'm a little behind in the dollar. I think I'm 15 minutes. But this dollar action is okay. It's not great. And if you look at the gold action, it's all of this is still in the trading range. The dollar and gold are going towards major support levels, both of them. So I'll be watching that next week very closely. So we're just about to wrap up. I do want to say, I just want to give one real kudos to Larry Perseverance. It was a great webinar that he gave the other night. It gave historical content, and it gave the way the actual configurations, you can activate them and you can use them. And I loved it because it corresponded so much to what I like to do in my Chapman Wave methodology. I do appreciate it. And thank you so much, Larry. Great admiration. That was a fabulous. And now you found the 222. This is incredible. So, folks, let's wrap it up here. Check out my opening call over the weekend. And I've just remembered I've got to send out an update to subscribers at 12:15 to 12:30 today. And watch that VIX index. If the VIX, in fact, pushes up over 14, watch out below. If it pulls back to 1273,
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,